The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
Good Saturday morning, Octo Nation. It's Charlie. I'm going to be your host for today. Today we're looking at a new SPAC that no one is talking about whatsoever, and it comes with some free stocks. You heard it right. Free stocks still right now. It is still sitting at the floor. Price is great, but if the company sucks, then it still doesn't matter, right? So, does it matter? I think so. Why? Because this company is awesome. This is a runoff of a company you might have heard of called Hennessy Capital. Remember them? HCAC, the canoe guys. They ran 3 successful SPACs, and one of the dudes who was almost in charge of it, he was definitely had his hands in the negotiations, finding the companies and all that. This is his own company that he's run off and now is doing his own SPAC. Let's dive on in. It's called NewHold Enterprises. They're an investment corporation investing in the future. You can see robotics and guys holding up an iPad thing right there, trying to diagnose something. Got the website there for you. This thing launched July 31st, 2020. Ticker for the United States right now is NHICU, because the units, your broker could have /u.u something. Just type in NewHold, one word, and try to find it. What is awesome is these units are coming with a full half of a warrant right now, which is super, super awesome. It's not a fifth, it's not a ninth, it's one half. So that means you can get tons of free warrants right now. $150 Murse is, I think, probably one of the perfect price points to get into. It is way harder for a company to go backwards than it is for them to go forward. Look, if a SPAC has an awesome target and all the negotiations are done, the paperwork is there, do you think it's going to be very hard for them to go and get more pipe, get more money to get something that could be worth more? No. It's going to be super easy for them to go get more investors on it in the pipe. So it's almost better to kind of start around the $150, $200 million range and then be able to work up, because a lot of companies still aren't going to be worth even past that, right? Because they don't want to start with a $2 billion Murse like maybe a lot of people are going to start doing. There's only so many billion-dollar companies that are going to want to go public that would actually even do well, you know? So, I don't know. I like this price point here. You can still get some kind of ground floor companies that are just popping. And not only that, we've seen it multiple times where companies started about 150, 200, and they can sky up and buy a billion-dollar company or past that. Move on. Industrial technology sector is the target with an aggregate enterprise value of 700 million or greater. So see, they're looking for something 700 million or greater. They know they can get more pipe if they really need to. So about this, a special purpose acquisition company, we know targeting industrial technology companies. We've got 150 million trust. We are seeking businesses enterprise value of 500 million or more that are at vanguard of industry 4.0. Deploying established technologies in new and innovative ways to transform their industries. A sampling of potential sectors include robotics, which could be super neat. Could even be the new robotic vacuum or something. I don't know. I'm sure they're going to go a little bit different of a route than that. Facility and infrastructure automation, precision manufacturing, energy and resource efficiency, machine vision, environmentally friendly manufacturing, advanced recycling, smart city / home, smart home stuff. So that could be it too, you know, all this new smart home technology stuff, that could be rad. And industrial sectors. So they're going kind of industrial, kind of green a little bit. If you know anything about the Hennessy stuff that was brought forth, a lot of it, at least the last one, was definitely like a big recycling play. So we're seeking an established high-growth company whose strategy and expansion could be accelerated through a public listing. Who we are, here's Kevin Charlton. He is the CEO. He's a co-founder and co-chairman of NewHold. Spent more than 20 years in private equity. Mr. Charlton was co-founder of River Hollow Partners and was president and COO of Hennessy Capital Acquisition Corp., a $115 million NASDAQ-listed SPAC that merged Bluebird Corporation. So that was the first one Hennessy did, which did very well. All of them did well. The school bus manufacturer. He then served as president, COO, and vice chairman of the board of directors for Hennessy Capital Acquisition. The second a $200 million NASDAQ listed SPAC that merged with Dask, which is something that got huge. That's kind of like a flatbed transportation stuff for semis and all that. Mr. Charlton also served as president, COO, and vice chairman of the board of directors of Hennessy Capital Acquisition for their third SPAC, $275 million, and that one merged with NRC Group, and that was kind of like this crazy recycling play with big machinery stuff and boats and all over the place. So prior to NewHold, he was also with JP Morgan Investment Corp and Macquarie. Mr. Charlton has served more than 25 board of directors in all relevant roles, and in almost all cases as chairman or lead director on behalf of the majority owner. He has a long history of working in partnerships with management, development, and executive strategic agendas. Prior to his career in private equity, he was the McKinsey and Company in New York and NASA headquarters in Washington. Can't deny having NASA on your background is pretty sweet. You know, New York and NASA. He's also worked with from Washington D.C. That's awesome. He's also chairman of American All Waste LLC, and currently serves as board of Dask, which is one of the places that he brought to help bring to market, a heavy haul trucking company that he took public. Also Sprint Realty Capital, a triple net commercial REIT, real estate investment trust that he took public, and Macro Energy LLC, a high efficiency lighting company. Mr. Charlton also has successfully sold companies, both strategic and financial investors, maximized value through this stage exit to separate buyers, and taken companies public, including companies in the manufacturing, distribution, business services, transportation, real estate, consumer products, and food and beverage sectors. I'll take all those. Mr. Charlton receives his bachelor degree in aerospace engineering, cum laude from Princeton. Y'all heard of Princeton? Master of Science in Aerospace Engineering and distinction from University of Michigan, and a Master of Business Administration with honors from Kellogg School and Northwest University. Toledo. So here's the three that he was definitely involved with the Hennessy bros. So there's the Bluebird. They actually have green buses, by the way, now. And then that Dask, and then NRC, which is moving like recyclable stuff from the ocean and all that. So that's a rad play too. So I like this one because it's industrial. It's something that you can touch, and it could be big, heavy, in people's way. But I think he's kind of gonna go the green way to it, is what it kind of sounds like to me. He's definitely going, like, even the always people that he's with, that he's really involved with, they are like a big recycling company, a massive recycling company, like on the East Coast and stuff. So, you could even bring like maybe them. I don't even know. Are they on the stock market yet? Next dude is Charlie Baines Reed. He's a COO. So he's a founding partner and managing director of NewHold. He spent more than 20 years in private equity and principal investing, both as a legal advisor and an investor. Mr. Baines Reed has an extensive experience working with portfolio companies on acquisitions, divergencies, consolidation strategies, debt financing and refinancing, capital markets, and exit strategies through private sales, public mergers, and IPOs. He has comprehensive knowledge of core legal and regulatory considerations relating to both domestic as well as complex cross-border transactions, so going across the ponds or not, Canada and Mexico. And his sector experience includes companies focusing on logistics, business services, real estate, diversified industrials, renewable energy, and financial services. I'm still waiting for one of these SPACs to pick up one of these products that reduce CO2 but doesn't make something totally electric. Because I've talked about it a couple of times, there are things that make it so we can still use like coal refinery and coal energy. All we got to do is we got to place this new recyclable thing on top of the coal pipe, the stack pipe, and what that does is it cleans it. So then we can still use coal. It just cleans the things going up. So if they could bring a company like that to market, I think that'd be like right up these guys' realm for sure. I think it'd be pretty sweet. So this guy was qualifying as a lawyer in the United Kingdom in 2001 with Simmons & Simmons in the corporate finance group. Mr. Baines Reed worked in London and Tokyo before moving to Minter Ellison in Sydney. Dude's been all over. to the M&A team. He joined Macquarie in 2005, working primarily on principal acquisitions based initially in Sydney, Australia. 2007, he relocated to the New York office where he focused on principal investments and capital market transactions across multiple jurisdictions before joining River Hollow Partners in 2004. He's got a degree in law from University of London and dual qualified as an English lawyer and a member of the New York Bar. He currently serves as chairman of Macro Energy, another energy company. He's on the board for NewHold and Powerful Foods, LLC. That might be rad. And board observer for Luna Pharmaceuticals. I don't want that. What's Power Foods, LLC? We should look that up. Maybe that could be another part of it. Anyways, it just kind of keeps going down the line. Like, dude, everyone they've got is top of the top notch, man. I mean, you can't get any better. And I love that these guys have already proven it. I mean, the first dude he's done, like 25 IPOs basically, 3 with Hennessy that he brought in. I mean, you can't mess with this background, but again, no one's talking about it right now, so we can get it for cheap. So more possible targets. So NewHold, they've got their own financial company too, but like they talk about, they're big on manufacturing. They're big in the domestic plastic manufacturing industry, and it's over $300 billion per year and is highly fragmented with small to mid-sized companies profitability serving in concentrated groups of customers. Favors trends in the industry include domestic onshoring and low-cost feedstock due to plentiful supplies of natural gas. So these guys are in it. They're totally in all these sectors already. You know that they've got like 10 to 20 companies that they're like, dude, we could bring these guys to business, or a lot of times they're already talking with them. They say they don't have the SEC filing, but come on, man, they've all had lunch and talked about all this before. Played a little bit of golf with each other and discussed a couple of things, So even like a new plastic play. So I invested in a plastic play 10 years ago, maybe. It's like bioplastics or something like that. It was right when California was first coming out and like trying to ban plastic bags from grocery stores, and those bags are like self-biodegradable. They're super easy, and it comes from the sea. It was all this sweet stuff, but ended up going under, and maybe now is a good time to bring something like that to market because I don't know, maybe it is. I thought then was, but now maybe it is. Even though no one's really talking about like recycling really anymore, I don't know. I feel like it was bigger 10 years ago. Maybe just because I was looking that stuff up. Let me know what you think about something like that. They're also big on infrastructure stuff, like platforms to focus creating differentiated architecture, engineering, construction management stuff, consulting firm with a multi-dispensary approach to geographies focused in California, Texas, Florida, and other national locations servicing state, municipal, and federal, as well as commercial clients. $93 billion spent on construction. It just keeps going. Environmental, so these are like the 3 pillars they go for. And then the last one is environmental service platform focused on wastewater handling and treatment. This could also even be huge, like with all the hurricanes and all that. We've talked about those kind of plays before, but maybe there's some sort of wastewater recycling business or something they could bring. All speculative. Can you guys think of any cool companies they might be looking at, might go after? Let's take a look at where these units are at. And by the way, these are looking like they're probably going to split within like a couple weeks. I think by the beginning of next month or whatever before. I think it's like the 5th or before of next month. So this is not a unit you get in at the beginning and have to wait 52 days. This is one that you could get in on Monday and maybe only have to wait 2 weeks for you to split your units up, and then have your commons and your warrants, and then do with it what you will. You can just keep them until you find something better, and then dump the commons, keep the warrants because they were free or whatever. Anyways, this is literally sitting at $9.98, which is like pretty much the floor of this. The lowest this got to was $9.87, but regardless, it's chilling right around like $10 a pop. And again, it comes with a half of a warrant also. So this is one of those absolute ridiculously smart plays to park your money in. because even if you bought in here and the whole market completely goes upside down, worst case scenario, what are you gonna lose? Maybe 5% at most or something. Come on, man. You know, best case scenario that this ends up being something totally rad and you got all those free warrants and then you're chilling in the commons anyway and you can make a ton of money. Because you got in early, you know? You didn't wait till it was already sitting at $15 and FOMO'd in. You got in when it was at base floor $10 and you got free warrants for free. So, come on. So we're gonna move on from there. I'm gonna go through some subscriber questions that we've got. What do you guys think about this play? You gonna jump in? I am. I'm already in. I might have talked about this on the one how the wealthy get rich with the free stocks before lightly, but I want to dive in a little bit deeper. All right, first question was from Darren Johnson. What are your thoughts on ARYB, soon to become CERE? Those are tickers he's talking about. So this is a biospace SPAC. So it's a SPAC ARYB that is bringing biospace to market, and they're changing the ticker to CERE. Emerging companies expect to receive net profits of $445 million when the deal closes. It plans to continue under Survival's therapeutics management team led by the CEO of Tony Coles. It is a novel approach in its quest to bring new treatments to patients living with neuroscience diseases. And today we are bringing that same spirit of innovation to our plans for becoming a publicly traded company. Since our founding as joint collaboration between Bryan Capital and Pfizer, they have pushed the boundaries to tackle some of the most vexing questions in neurosciences. I like neuroscience stuff, using science to target the specific retinal subtypes involving in causing these devastating diseases. Over the next 12 months, we expect to have initiated at least 6 clinical programs across multiple indications, including schizophrenia, anxiety, epilepsy, Parkinson's disease. Today announced ensures that we have access to the capital we need to advance our clinical programs through the several key milestones in our quest to bring these therapies to our patients. They're using novel approaches in the quest to bring the new treatments to living neuroscience disease. Yeah, so, this kind of still falls in that category where, man, it's so sketchy, right? My other big problem with these types of plays is like, I'm all for people getting help with all those problems, but, I've even found like a lot of these, like for instance, they'll prove something that could be totally rad, and then what do? You might get a slight run up because they announce that they might have something that's going to work. Then they go to FDA approval. That could take X amount of time, who knows? And so you're sitting there waiting. The stock is now consolidating forever, and then the FDA can just come out and be like, "No, we don't approve it." Even though it's like totally rock solid or whatever, they just don't approve it. And then what happens to the stock? Goes all the way down. So these are one of these ones where most of the time in the medical stuff, you're going to lose it. You're not going to make money. I like to invest in stocks that most of the time are going to go up. I hope these guys do well. I love the fact that they are kind of a spin-off of Pfizer, so you could get a lot of Pfizer investor people over to this one, and this one could do well. But just getting into this exact type of space is just so sketchy. And the problem is once these fully get merged and brought to market through other people, that $10 SPAC no longer has a floor and can totally tank also. So what if right away they release something that's like, oh, that thing we were talking about, it actually doesn't work on schizophrenia. I don't know. It's just not really for me. Again, this could be cool. There's a lot to it. I think this one seems a lot more solid than a lot of that are out there, but it's just not my space. It's just too risky. They have a lot of cool things they talk about, regeneration stuff and all that, but again, it's just too far out there for me. Try to convince me otherwise though, would you? Great content. What do you think about Trex, Trex? That is the ticker. I am new to investing, purchased some shares prior to the stock split. Now it seems it keeps falling. Love to see what you think about it and about the stock and its future. Thanks for the videos. This is by Chris Vines. Thanks, man. So what is Trex? Trex is like a hybrid synthetic decking. Trex deck, y'all heard of that? Trex decking. It's like it's like a wood that's got like hybrid plastics or nylons in it. and it looks kind of like wood. It definitely feels like plastic, really, really hard though. And it's just meant to outlast wood by a big way, right? And it does. It's good stuff, but it's, it's definitely like kind of a plasticky thing. What do I think overall, just right off the bat about that? I think that it's kind of sketchy, because people are at home right now getting bored. And so what are people doing? They're remodeling their houses still. They're still doing that, right? That's why Home Depot and everything is showing record amount of increase. All the home stuff is showing records. But, once this economy does actually catch up to the stock market or vice versa, it's going to go down, right? Because there gets a point where people all of a sudden their credit cards are maxed out. They finally realize that you're not going to be able to go back to work, and people are going to stop buying Trex decks for a while. Okay, right now this is always what happens, right? Like right before 2008 housing crash happened, this is exactly what happened. People were taking money out on their house and getting reverse mortgages and all that crazy stuff, and pulling money out and buying Harleys and remodeling their house with that money. And they're like, oh, we don't have to pay more money for another 2 years because it's an adjustable rate mortgage now. That'd be fantastic. But it ends up catching up with people. So what do I think about this? This might be something good, very long term. It could have some small run up here in the next maybe 3 to 6 months. But once the numbers really start coming out, the real numbers where, the businesses stop getting the fake grants. They're not grants, they're loans, by the way, the government is giving out. Once that all catches up and we start seeing, I'm going to speculate over 25% of businesses are go under in the next couple of years at least. That's when everything's just going to go. And the last thing people are going to be buying at that point is Trex decking. They're just going to keep what they got because that's all the money they've got for it, right? They did do the stock split. It is kind of weird that we didn't see too much movement in it. I checked out the chart though for you. If you do want to keep it long term, you're probably, here's a line, okay? I drew a line for you at 66.41. Watch that. I would put in a sell maybe 5% below that if you really want to stay in it, because if it's riding that channel right at it, it's gotten rejected like 5 times trying to pass through it. But if it passes through that, this thing could go parabolic down to, I don't even see anything else for a while. I mean, maybe down to like 61, but I would just say ride this one tight. You also have a gap that was never filled down here at around 52.50. So this could break bull, go south, and head down to 52.50. And I would not want to be along for that ride. I'd want to be out about here and just take a little loss, then take this massive dump. Okay. I'm still surprised though there wasn't more reaction with the stock split here. It only went from like 66 to 72-ish. Usually that you get a lot more volatility out of stuff like this, but I'm sure Trex has got some hardcore people that have been in it for a while. But again, like anything, this still has had this crazy run up, from March and even all-time highs before. And so I think it's kind of got its peak for now. The next quarter they could release, and they probably will release some pretty banging numbers. So if the market doesn't crash before then, you might be okay when quarter 3 numbers come out. This could get another run up from there, because I'm sure they're still going to do good this third quarter, because people are still spending like crazy on home improvement because they haven't run out of credit card juice yet. Okay, but just be careful, man. Just ride it tight. And the volume is also way down, by the way. You can see the volume down here. Look at this. You want to, the volume is really down. When volume goes down, that usually means stocks kind of start bleeding down too. You want to get them right when see this green candle here. You want to get stocks right when you've got some parabolic volume going up like that. You want to surf this up, and then when you can see the volume going down, that's where you want to sell. Boom. Okay. All of a sudden you see like 5 reds in a row. Get out, because now you just surf that all the way up. Let's take a look at Roni asks, hey, will you look at HTBX? HTBX, I looked it up. It says Heat Biologicals Inc., a biotechnology company focused on the field of cancer, immunotherapy. Dude, no. If you've been around a little bit or ever studied cancer and all that, there is 10,000 billion companies out there that supposedly are right on the brink of curing cancer. This one could finally get released. The FDA could approve, and this could be the one. But 99% of the time, this is not going to work. You can get a run up from it. Yeah, you get some decent news, get some run up, but 9 times out of 10, 99.9 times out of 10, this thing is going to just end up dead and in the water. There's so many other plays you play, man. I'd not want to be in that one. Michael Worsner said, great video. Hey, man, have you revisited Workhorse recently? Or sorry, not Workhorse, Work Sport recently. Nice green day for them. They have a live Q&A on the 21st at 5 p.m. FYI. Yeah, so remember the solar paneled truck bed dudes? Well, they kept kind of saying that they're going to release some banging news coming out the 15th or this day. They've been late a couple times. Don't like that. Just like the CEO of ChargePoint was saying yesterday or the day before, you can say whatever you want in business, but you got to back it up. You got to do it. So dates haven't been right. Not only that, the past 2 times he's done that now. Since then, he said, big news come out. There's never any big news. It's just the same stuff. Like, oh yeah, we still can't say anything, but we're doing good and we're in talks. That's great, but dude, I don't know, man. If you're gonna hype it up and say it's gonna be big, we need a brand, man. And until then, it might still have some chopping around. You did get a little bounce because this guy did say that there's gonna be a live Q&A on 21st, so it'd be good to pay attention to that. Maybe he drops some news there. I doubt he does. I doubt he drops a brand there. But supposedly, they're working with quite a few manufacturing and OEMs and all that, which is great. But I think we just need to calm it down. And he just needs to give exact dates or not dates at all. Tell us he does it just straight up. I don't know when I can release this, but I'll definitely let you guys know. But I'm sure we're in the works. Say something like that instead of hyping stuff up and making people think that's going to happen. But thanks for the heads up, man. Yeah, pay attention if you guys are in that. I still have a little bit left of that stock, and I plan on keeping a little bit. We'll see how this Q&A goes and how it keeps farming out, but we'll just move on from there. Alex Bremen said, hey, Charlie, love your videos, brother. Thanks, man. Check out the spicy burrito options called CCXX. Easy money. Let's go. So CCXX, have you guys heard of that? That's a SPAC. And they are bringing multi-plan insurance to market. And that is big money's insurance. It's like, I think $1 or $2 billion insurance play, but it's a middleman insurance play, which I actually like because they basically just pull money from the middle of the insurance transaction from the hospitals to the people. They're the middle, I like that play. I don't like medical stuff too much, but I do kind of like this one. I do have some calls in it. Those did just come out like I think a week or 2 or something like that ago, but still calls definitely sketchy, and still this is still sketchy because it's insurance and just they don't do well. It's not like technology or green or EV or any batteries, any of that stuff. Mining, the silver and gold, it's not like that stuff. You can look at even like the teledoc, like okay, teledoc has done very well, right? Like the sub teledocs that have come out, like the sock teledoc, done terrible. There's another one in Canada that came out. They came out with some banging news, banging numbers. I grabbed some of that before that came out. That banging news came out, and the stock like literally didn't even do anything. People just don't care. It's just not gonna. It could end up hyping, but chances are it won't. I still think this one will still get a little bit of a run up, but I wouldn't expect it to go shill or Nikola. I wouldn't expect to go Nikola when it was going up. I don't think it's going to get to 80 or whatever, or 60 or something like that. But it could. I'm sure it will. Most SPACs towards the end, last month or two, they do that U. They do the initial spike up, and then they do the U. It goes down. Smart people start buying again, and then it starts going up when it gets closer. So we could definitely have that again with there, and I think we will get a decent run because it's still sitting really low. I'm going to actually look the chart up on that because I need to anyway. So where we at? So yeah, we had the initial run. It went to 13. This has been pretty parabolic though. I mean, it actually jumped all the way back. It went all the way down to 1082, then all the way up to 1234. Then it created that U bucket. Spiked up, spiked back down. That's pretty aggressive. Is it sitting anywhere crucial? Maybe. Yeah, let's draw a line right there. That way we've got it. Make it green because we want to get to it. Yeah, I would watch this line right here because we tagged it here, and we tagged it here again, and it didn't make it. So, if this gets past 1171, we should be green to go. Up to like 1227 or something. And this is still low, because again, this still has a floor. It still has a floor about $10. So the risk to reward is still kind of low on this. I think next week we're going to have a decent rally on everything again. So just manage your risk, but follow that line there. And then we got another question from E&M Money Investors. He said, hey, what's your thoughts about NNOX, NanoX imaging? I think I might do a video on that. That's a new age like X-ray machine thing, but it uses nanotechnology and it's cheaper and stuff. You guys want me to do a video on that? NNOX, NanoX imaging, have you heard of that? I've had a couple requests on that. I like the charts on it too, so that's one of the reasons I'm kind of thinking about doing a video. So let me know. Any other plays you want me to take a look at? Any more questions, leave them down in the comments for sure. If you haven't subscribed, please do it. Definitely helps out. But what we really want here is just spread the love, spread it out. Take this video and set it on whatever platform you're on or not on. That definitely helps out, because when you guys are talking about octopus, that is a lot more credible than if I do. So please help out, and I'll make sure to keep helping out and putting these videos out. Y'all have a good rest of the day. Take care.
Did you know that we give away free silver? Simply leave a comment on the video, and as long as you're in the continental United States, you can be automatically entered to win. Please friend us on Twitter and StockTwits.